Welcome back to the Pro Ticker Podcast, your Saturday morning edition covering major financial magazine headlines.
Yeah, we've got quite a bit to unpack today.
That sounds like it.
From some pretty crazy salaries and global trade tensions to Elon Musk's latest headline-grabbing moves.
Yeah, he never seems to stay out of the headlines.
That's for sure. Shall we dive in?
Let's do it. First up, the Wall Street Journal has a piece about private market pay that's, well, skyrocketing might be an understatement.
Yeah, that may be putting it lightly.
Just a little bit.
The journal reports that the average pay for alternative asset managers jumped a staggering 35% in 2023.
Whoa.
We're talking an average of $1.4 million.
Okay, hold on. 1.4 million. That's a lot.
Yeah.
Even for high finance, that seems like a huge jump.
It is, and it signals a few things about the current state of private markets.
Right.
For one, certain roles are becoming incredibly valuable.
Like what?
Particularly in private credit and private equity, median pay in those areas saw an 85% increase, reaching around $750,000 and $730,000 respectively.
Wow. Even entry-level analysts at these firms are reportedly making over $270,000. That's more than double the average U.S. wage. What's driving this frenzy?
It's a talent war out there, but not just any talent. Investors are holding on to their money tighter than usual.
Right.
And it's tougher to exit deals in this market. So firms are prioritizing professionals who can bring in new capital.
Okay.
Think fundraising whizzes and those who can effectively manage existing portfolio companies. They're the lifelines in this environment.
So it's less about deploying capital and more about attracting it in this climate.
Yeah.
That makes sense. The journal also mentioned that there's less focus on hiring investment professionals right now.
Right. Firms seem to be waiting for the Fed to ease up on monetary policy. Basically how they control the money supply and interest rates before they really ramp up hiring in that area. It's a strategic pause.
Smart move.
Yeah.
I bring on a ton of new investment pros when the market is still volatile.
Speaking of strategic moves, let's talk about China Bloom. Bloomberg reports that they're doubling down on stimulating their economy, particularly consumer spending. China's economic picture is fascinating right now.
It really is.
They're struggling to hit their 5% growth target this year, and the property crash has really taken a toll on consumer confidence.
Yeah.
So they're pulling out all the stops to get people spending again.
Bloomberg mentioned a quite large stimulus package in the works. Some analysts are predicting as much as 3 trillion yuan. That's $421 billion being injected into the economy this year alone.
It's a gamble, no doubt.
Yeah, for sure.
Some experts are worried that China's focusing on short-term fixes instead of addressing the deeper issues within their economy. Time will tell how this plays out, but the implications for the global economy are significant.
Absolutely. And speaking of global implications, the U.S.-China trade war is adding another layer of complexity to the situation. Germany's finance minister has issued a stark warning. A trade war means everyone loses. The Wall Street Journal covered this as well.
He's not wrong. More tariffs could disrupt supply chains, increase prices for consumers, and even slow down global economic growth. No one wins in that scenario.
And Germany isn't just talking. The journal reported that they're prepared to retaliate if the U.S. starts a trade war with the European Union. And to make matters even more interesting, Christine Lagarde, the president of the European Central Bank, warned that rising trade barriers could reignite inflation.
That's a significant concern. Essentially, she's saying that if countries start throwing up trade barriers, it'll cost more to get goods pushing prices up for everyone. Not what we need with inflation already a concern, right? It's a delicate balancing act for sure.
Absolutely. Now, for a story a little closer to home and maybe a little more, shall we say, personality-driven, remember when Elon Musk tweeted that Tesla workers could lose stock options if they unionized?
Ah, yes, that tweet. Well, a court just ruled that it was a protected speech, according to Bloomberg.
So a win for Musk in this particular battle.
For now, it seems so. The court decided that the National Labor Relations Board overstepped its authority by ordering Musk to delete the tweet. It's a significant ruling with implications for both labor rights and, of course, how Musk uses social media.
Which, as we all know, can be unpredictable, to put it mildly.
Yeah.
This isn't the first time his tweets have landed him in hot water, and it probably won't be the last. But this ruling could embolden him even further.
Perhaps. What's
Yeah.
interesting is that this ruling comes as Musk is facing scrutiny for his other companies like SpaceX, which is in a separate fight with the labor board over firing employees.
It seems like wherever Musk goes, controversy follows. And speaking of controversy, the Wall Street Journal dropped a bombshell report revealing that Musk has been having secret talks with Putin since late 2022.
Now, this is where things get really interesting.
Yeah.
Sources told the Journal that the conversations have covered a wide range of topics, from business to geopolitics. And apparently, Putin even tried to pressure Musk to withhold Starlink SpaceX's satellite internet service from Taiwan.
Well, hold on. So this tech CEO, who's also a major player in the space industry and has a penchant for controversial tweets, is having clandestine meetings with world leaders. Sounds like something out of a movie.
It does, doesn't it? But it's a reality with potentially huge implications. These talks raise serious questions about potential conflicts of interest and Musk's role on the global stage. We have to remember that SpaceX is a major Pentagon contractor, so these talks with Putin have national security implications.
Absolutely. Situation that bears close watching, to say the least.
Uh,
Now let's shift gears to the world of crypto. Is Tether, the world's most traded cryptocurrency, in trouble?
According to an exclusive report from the Wall Street Journal, federal investigators are probing Tether for potential sanctions and anti-money laundering violations.
This is a big deal because Tether is designed to be stable, unlike other cryptocurrencies. It's pegged to the US dollar, making it a popular choice for people looking to avoid traditional financial systems.
Exactly. The investigation is focused on whether Tether has been used to fund illegal activities such as drug trafficking and terrorism. If that's proven, the consequences could be massive for the entire crypto market.
And it gets even wilder. The journal's report reveals that Tether is being used by some of the biggest threats to global security. We're talking North Korean nukes, Mexican drug cartels, and Chinese fentanyl manufacturers. It's a stark reminder that even seemingly stable cryptocurrencies can be exploited.
It certainly is. This investigation could be the catalyst for a much broader crackdown on the crypto industry. Regulators and policymakers are realizing they need to catch up to the fast-paced world of cryptocurrencies and address the risks involved.
Absolutely. And finally, for those hoping for a rebound in the housing market, I've got some potentially disappointing news. The Wall Street Journal reports that sales are on track for their worst year since 1995 for the second year in a row.
Ouch, that's a tough pill to swallow. What's
Yeah.
driving this slump? The journal points to a few key factors: stubbornly high mortgage rates, low inventory, and increasingly wary buyers.
Even with the recent dip in mortgage rates, it doesn't seem like buyers are rushing back into the market, and now rates are back on the rise. The dream of homeownership is becoming increasingly elusive for many.
It is. And this housing market slowdown is a significant factor in the Fed's fight against inflation. Higher borrowing costs for homes directly impact economic activity and consumer spending. It's a complex web of interconnected factors at play.
Absolutely. And with the upcoming presidential election, there's a lot of uncertainty about what the future holds for the housing market. Both candidates have pledged to tackle housing costs, but it remains to be seen how they'll approach this complex issue.
It's definitely something to watch closely in the coming months. It feels like we're at a crossroads in so many areas: the economy, geopolitics, even technology. There's a lot to digest here and even more to think about.
You're telling me from soaring salaries and trade war jitters to Elon Musk's secret chats and the crypto world under fire, it's been a whirlwind of a week in finance, and it seems like the ride isn't over yet.
Not by a long shot. But
Yeah.
before we get swept away by the next wave of headlines, I think it's worth taking a moment to step back and look at the bigger picture.
I like where you're going with this. What's standing out to you? What are the trends that we need to keep our eyes on?
Well, there's a clear theme of uncertainty
Oh,
running
really?
through all these stories: volatile markets, geopolitical tensions, and an upcoming election that could drastically change the economic landscape. Makes for a pretty unpredictable environment.
Yeah, absolutely.
Yeah.
And let's not forget the ongoing conflict in the Middle East.
Oh, right.
Reuters is reporting extensively on Israel striking military targets in Iran,
Oh, wow.
which could have ripple effects throughout the region and beyond. Plus, there's the war in Gaza and the ongoing conflict with Hezbollah in Lebanon.
Exactly. All this uncertainty makes it incredibly difficult for businesses and investors to plan for the future. No one knows what's coming next, and that leads to caution and hesitation.
You can really see that playing out in the housing market. People are reluctant to buy when mortgage rates are so unpredictable and home prices are still relatively high. It's like a stalemate where no one wants to make a move.
Right. And on the flip side, you have this incredible pay growth in the private markets. It almost feels like a disconnect between the struggles of everyday people and the booming world of high finance.
Yeah, the Wall Street Journal article really highlighted that. It's great that those professionals are getting paid well,
Yeah.
but it raises questions about income inequality and whether everyone is benefiting from this economic recovery.
Absolutely. It's a conversation we need to have as a society. And speaking of conversations, let's circle back to Elon Musk for a moment. His secret talks with Putin, as reported by the Wall Street Journal, really highlight how blurred the lines have become between business technology and geopolitics.
It's like something out of a spy novel. This tech CEO, who's also a major player in the space industry, is having these clandestine meetings with world leaders. It's a lot to process.
It really is. And it makes you wonder what other conversations are happening behind closed doors that we don't know about. It feels like we're living in an increasingly opaque world.
Speaking of opaque, the crypto world is under a microscope right now with the federal investigation into Tether. The Wall Street Journal's reporting on that was pretty alarming.
What's alarming is how deeply intertwined Tether is with some of the most serious threats to global security. It's a wake-up call for regulators and policymakers who need to catch up to the fast-paced world of cryptocurrencies.
It also underscores the importance of understanding not just the technology behind these digital assets, but also the potential risks and consequences of their use. We need to be asking tough questions about regulation and oversight to prevent these currencies from being used for illegal activities.
I couldn't agree more. And looking ahead, it's clear that these issues aren't going away. In fact, they're likely to become even more complex and intertwined.
Which is why we do these deep dives, right? To help our listeners navigate this complex world and make sense of the headlines.
Exactly. We're all in this together trying to figure out what's next. And hopefully by having these conversations, we can shed some light on the challenges and opportunities that lie ahead.
Now, there's one more major story we need to address before we wrap up today's deep dive.
That would be.
Well, former President Trump sat down for a 3-hour interview with Joe Rogan. You know, the podcasting giant.
Oh, yeah.
And it's making waves across the media landscape.
I'd expect nothing less from a Trump interview. What did he have to say?
According to CNBC, Trump covered a lot of familiar ground. The war in Ukraine, election integrity attacks on the media, and even some conspiracy theories about the 2020 election.
Sounds about right. But what's interesting to me is his choice of platform. Trump's clearly trying to reach a different audience by going on Rogan's show.
It's a savvy move, I'll give him. That Rogan has a massive following, especially among young men, who are often harder to reach through traditional media.
Exactly. And this interview could give Trump a boost in the polls, especially with those who are already leaning toward him, but might not be following the election that closely.
It's a reminder that the media landscape is constantly evolving, and politicians are increasingly looking for new ways to connect with voters.
And for those of us who are trying to keep up with the news, it means we need to broaden our horizons and pay attention to what's happening on platforms like podcasts and social media.
Absolutely. It's no longer enough to just read the newspaper or watch the evening news. The news cycle is 24/7, and it's coming at us from all directions.
Which brings us back to our original point. Uncertainty reigns supreme. Buckle up, folks, because the ride is far from over.
And that's exactly why we do these deep talks, to help you connect the dots and see the bigger picture. It's not just about knowing the facts. It's about understanding how they all fit together.
It's about developing that critical thinking muscle so you can sift through the noise and make informed decisions, whether it's about your investments, your career, or even just how you view the world.
I couldn't have said it better myself. So as we wrap up this deep dive, what's one thing you'd want our listener to walk away pondering?
I'd say this: pay attention to the stories that aren't making headlines.
Okay.
What's lurking beneath the surface? What are the underlying trends that are shaping our world, even if they're not grabbing the spotlight?
Oh, that's a good one.
Yeah.
It's easy to get caught up in the day-to-day drama, but those subtle shifts, you're right, they often have the biggest impact in the long run.
Exactly. So keep asking questions, stay curious, and don't be afraid to dig a little deeper. There's always more to discover.
Wise words to live by. And on that note, we'll see you all tomorrow morning with fresh headlines from the world of finance. Until then, happy investing, happy learning, and keep diving deep.